whenever any kind of war started. It can be a small one or it can be long-lasting one. The initial impact on equity is always high. This time around,
Valuations have become better. So, from that perspective, do you see flows coming into the market? Hello, investors. Welcome to Moneynomics by Access Mutual Fund. I'm Shalini Gautam, and I have with me our head of equity, Shreesh Devalkar. Today, we'll be discussing the key developments in equities and their impact on the economy worldwide. So, Shreesh, let's begin. The most important topic that's going on in everyone's mind, the impact, the way that the geopolitical conflict has been playing out and its impact on the markets. So, how do you think this, while we do not know how long this will last, we cannot predict the duration, but how do you think this conflict is going to play out and how will it impact economies globally?
sure. Uh, as you're writing, the main caveat be how long it's there, because that is the real crux of it. If you assume that it is there for 1 month to 3 months, then probably it's not much impact. While if it is going to last longer, then it definitely has the impact. The impact comes mainly from the inflation point of view. So already we have seen the crude oil prices. Already there is a lack of supply. So it's for only out price. So like already LNG, LPG supply. There are certain chemicals like sulfur, sulfuric acid. So those chemicals also there is a supply issues. So point is that on the broader thing, that the lack of availability of material. As of now, we have not seen much impact. Few companies have highlighted issues around it when it comes to LPG supply and its impact. But as of now, it looks manageable. But more important is the inflation, and the crude, it is 100, it went to as 110 as well or more. So that is the real crux of it for as far as India is concerned. Even globally, the higher crude prices affects multiple countries. It is not that only India, but obviously in our case, we being crude importing country, the impact is sizably higher, especially when it comes to its impact indirectly on the inflation through current account deficit. Then it has impact on currency. It has impact on the liquidity as well indirectly. Uh, so this is how it is going to shape up. But in my judgment, if it is going to last not more than 1 to 3 months, then I think the things are
Okay. Also, that's about the economies and how it impacts. But tell me, how is this playing out in the equities market? Because equities have been, see, across the globe have been declining quite a bit. So, where do you see this change coming about? How do you see, equities coming back, rising again in some time?
as far as equities are concerned, as I said that already the impact whenever historically, if you see that whenever any kind of war started, it can be a small one or it can be long lasting one. The initial impact on equity is always high. This time around we have seen that initial impact already. Yeah, this time around initial impact on especially the crude oil prices is sizably high, no doubt on that, considering the importance of the strait, etc. So obviously that impact has to be high. So, as far as equity is concerned, again, it goes back to the same point that how long is the question. Uh, every day we keep on hearing about news flow around various world leaders talking about it and giving comfort on where it is heading and how there is an intention to close this matter sooner than later. So, in that context, from equity point of view, market is trying to take comfort from those comments. And especially then in the Indian context, crude is the real barometer for that because it directly affects us. So that would be watched out very closely as a barometer for both uh, its impact on us and the progress on this situation.
Valuations have become better. So, from that perspective, do you see flows coming into the market?
Valuation definitely has become better. If you look at mostly the large cap space, and even before this, I've been talking about it that before jumping into the valuation discussion, actually, if you look at the growth point of view and where the things are improving, already we have seen in autos the two-wheeler numbers are good. The tractor numbers are good. Commercial vehicle numbers are have started improving. The credit growth, which is more important part, has done well. Uh, re- the central banker has shown full commitment to maintaining liquidity in the market, including the recent OMOs side. So that is again a good news, and that is really pro-growth policy stance with both central government as well as the central banker is taking. So all these angles are actually heading to the fact that yes, the intention is for the growth. Uh, there is an impact of war and certain supply chain disruptions, what I had added. But end of the day, if it is not going to last for a long period of time, then the trajectory for India, as far as growth trajectory is concerned, is good. And the valuation in the context are reasonable in my opinion, especially in the large cap segment.
Okay. And how are you positioned in your funds? Any change in strategy that you have followed in the last 1 month?
There is no particular change in strategy. We have been highlighting that we have increased financial services, we have increased especially leaders, then some part of autos. We have been positive on capital goods, especially a power sector capex thing. Recently, we would have last month we would have gone up in pharmaceutical as well marginally. So there are multiple pockets. Some pockets are because of the valuation, some are really doing well. So the example is capital goods doing well, valuations are relatively high, but we are there as well. As well as some pockets like pharmaceutical, etc. There the valuations are reasonable, and that's where in the recent past you would have gone up as of last month and in that as well. So these are particular segments where we are taking bottom up approach and taking individual stocks.
Investors have been really nervous about the way the conflict has been playing out. And if you were to send a message to your investors, if you want to leave a message to your investors, how would you ask them to be invested in the market? Also, in the context of the note that we had released last week, as such, where we spoke about how conflicts impact India and how markets actually, return to mean over a period of time. Would you like to elaborate?
Yeah, sure. So in our note, as you highlighted, we have made a point that in the past, whenever there has been similar situations, markets corrected, but over a period of time, it's about companies and the economy, how they are resilient and how they come back. So the market performance and the stock performance has been more dependent on them. And I think our country as well as our companies, most of the corporate India is resilient, and that's where the stock prices would track that more than the event specific risk. So that's how I would look at it, and that has happened in the past instances as well.
Okay. I think discipline and staying invested in the market is the key in these times. Thank you, Suresh, so much for your views. And a big thank you to all our investors. Keep staying invested.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.